Hello, and guess what? It's me again, Kenny Polcari. It is Monday, October 18th. I am your host of the party, and here's what's happening today. What do we need to know after that last week that saw markets end higher for the week and end higher for the day on Friday as investors pushed all those issues aside, like I said, right? But this morning, the issues are causing global investors to reconsider the outlook. Oil continues to push higher as some are now calling for $200 a barrel of oil by this time next year. U.S. Treasury is now trading at 1.617%. How fast is it going to be before we hit 1.8% like we did in February? Demand pull or cost push? Can it be both kinds of inflation? And what are we having for dinner tonight? Well, we're going to have the Russian potato onion soup just because it fills your belly. May not be good, but it fills your belly in a time of inflation and you're all concerned about prices. So look, issues, what issues? I asked you that on Friday, right? Investors appeared to push all those concerns to the back burner, choosing only to focus on all of the better than expected earnings. I think the terminology was actually robust results, along with all the decent forward guidance, and that was enough to send investors on a buying rampage. Stocks ended the day and the week higher as we get ready to enter the second week of earnings, which are also expected to be, guess what? Better than expected. Economic data during the week also helped to soothe investor angst, with Friday's advanced retail sales knocking the cover off the ball. Expectations for a weaker consumer showed that we were expecting down 0.2%, but it was replaced by a much stronger number at plus 0.7%. Ex-autos and gas still produced a robust number of plus 0.7% versus the 0.4 we were looking at. University of Michigan sentiment and the 5-year inflation outlook both slightly weaker, while the 1-year inflation expectation was slightly elevated. But that's no surprise, or at least it shouldn't be. Prices are skyrocketing all around us, leaving us to ask, is this demand pull or is it cost push inflation? Look, demand pull inflation is when the aggregate demand for products is more than the current supply, pulling prices higher, versus cost push, which is when demand remains constant but supply falls, pushing prices higher. So I got to ask, is it increasing demand or is it a shortage of supply? In my mind, it's both, because we're seeing an aggressive consumer, right, pushing demand up, pulling demand up, but we're seeing the impact of COVID and what that's done to the global supply chain, pushing supplies down, which is now pushing prices up as well. And this is not good when you got both of them working in tandem. The result is not going to be very pretty. And I just want to make sure demand is up and supply is down. So it's not really either or, right? It's both. Just look at the oil market. Let's even talk about that. Do I need to say more? Let's be clear. There's plenty of global supply. Supply is not a problem here. In fact, the U.S. was the swing producer and the largest exporter, beating out the Saudis by millions of barrels a day, helping to keep Saudis and OPEC Plus in check and energy prices at historic lows. So much so that the Saudis are upset. They flooded the oil markets back on April 20th, 2020, sending oil futures markets into negative territory. Remember that? Causing the West Texas Intermediate May futures to fall $55 a barrel to end the day at minus $37.63 a barrel. Do you remember that? Do you remember the hundreds of oil tankers anchored off the coast because they had no place to put the oil? We were awash in oil, and the Saudis were angry. But now, as the world reopens, demand for energy is skyrocketing, yet the Bidens have choked off U.S. supply, and the Saudis, along with OPEC Plus, are doing little to help resolve the problem. In fact, this morning, we're hearing calls of $100 a barrel oil by the end of this year, which isn't out of line, but $200 a barrel by the end of next year. West Texas Intermediate, which rose by 3% last week, is trading up another 1.25% today at $83.30 a barrel. Power generation companies are abandoning expensive gas and coal in favor of oil and diesel to generate the power. Look, easing global COVID restrictions along with colder temperatures in the Northern Hemisphere are only expected to worsen the supply shortage, and with OPEC Plus not in a rush to help ease the issue, expect to pay more for energy. Because I don't see solar or wind power coming to the rescue anytime soon. Unless, of course, we all sign up for the rolling power outages like they have in California. Whatever, there is there is another story in that, right? But in the end, the Biden administration must take their stranglehold off the U.S. oil industry if they want to stop this madness. The Saudis could easily fix this issue by flooding the markets with supply, like they did in April 2020, but don't hold your breath. They love to see oil rising at $85 a barrel on its way to 100, holding us and the world hostage to oil. This morning, though, apparently global investors are concerned about some of those issues that they weren't concerned about last week. China reported a drop in third quarter GDP coming in at plus 4.9% versus the expected 5.2%. That was a little bit weaker. Industrial production rose 3.1% versus the expected 4.5%. That was weaker. And that started out the week in Asia, mostly in negative territory. Japan, China, South Korea, and Taiwan all ended the day down. Hong Kong and Australia managed to eke out very, very slight gains. European markets are all lower this morning, reacting to the weak in Asian performance. And this is they await the start of the second week of earnings, right? So is this week, you got to ask, is this week going to bring about that same outperformance? Will this week bring more robust earnings? In addition, the Bank of England Governor Andrew Bailey this morning warned that they need to respond to price pressures. Rate hikes are now expected in the UK. When? Not sure, but you can bet it's going to be sooner rather than later. And that's going to be the story we're starting to hear around the world, right? At the Fed, at the ECB. At 6:30, all the European markets are down across the board about 0.5 to 1%. And that tone, U.S. is playing follow the leader with that negative tone around the world, right? As futures are all pointing lower. Dow futures down 100, the S&P's off 17, the NASDAQ down 72, the Russell's off by 11 points. 10-year treasuries, which ended the week yielding 1.6, are now yielding 1.617 this morning, and that's only adding to the pressure. Again, the question isn't if rates are going up, it's the pace at which they will go up that's going to rattle the markets. Now, to be clear, rising rates will put a cap on any near-term attempts at a rally. And if those rates spike higher, a la February, then expect to see stocks retreat swiftly, a la February. But if we can manage to control the narrative, then they may be able to blunt any downturn. So I guess you have to ask, can they control the narrative? Can the Fed control the narrative? We're going to see in the days ahead, right, whether or not they're going to be able to. Because now even the mainstream media is beginning to call out rising price pressures across the board, acknowledging that something must be done. So is anybody listening? By the way, the government increased the COLA, cost of living adjustment, for next year for Social Security recipients. Did you see that? They raised it by 5.6%. And I say it because it's usually 1 to 1.5%. So the government recognizes there's a problem. Eco data this morning includes industrial productions, expectations of 0.2%. Capacity utilization, 76.5%. That has to move into the 80s before the government's going to acknowledge that there's a capacity issue. Later in the week, we're going to get building permits, housing starts, mortgage apps, the Fed's beige book, which details the economic conditions in the 12 Federal Reserve regions around the country. At the end of the week, we're going to get existing home sales and manufacturing and services PMIs, which will speak right to the health of the economy, right? As we know, those have been in the high 50s, low 60s, which puts us in expansion mode. It is the second week of earnings, and we can expect lots of action. Names to watch, all the big names, right? Netflix, IBM, Verizon, Procter & Gamble, United Airlines, Johnson & Johnson, and State Street, to name just a few. Remember to pay close attention to the companies that report pricing power, because in this inflationary environment, right? Consumer staples comes to mind. The XLP, now that's bounced off its 200-day moving average, pushed up and through its intermediate term, and now it's kissing the 50-day moving average, right? Its short-term average at 71.25. If it succeeds and many of the consumer names suggest pricing power, then watch as this group starts to outperform. Remember, 2 weeks ago, Pepsi reported earnings. They beat on the estimate, and they told everyone that they were raising prices on a variety of products across their portfolio of companies. Since then, investors have taken Pepsi up nearly 7% since they announced that they were raising prices. Bitcoin this morning is trading at 61,000. Ethereum is trading at 37.75 as the world awaits the trading of the first futures ETF tied to Bitcoin, which is supposed to start trading today. ProShares, the first one out of the gate. The ticker symbol is BITO. It will trade on New York Stock Exchange, Arca Exchange. Invesco, VanEck, and Valkyrie all coming sooner. This is a watershed moment for the industry, so sit tight. right? This is going to be very exciting. Not the time to be selling your Bitcoin or Ethereum just because there's so much excitement around it. The S&P ended the day at 4471, up 33 points, off its daily high. This morning's global weakness is suggesting that we're going to see the indexes retreat. 4437 is the key level to watch on the S&P because that will now be support. And if we fail there, then expect we're going to test 4370 very quickly, which is intermediate. Remember, you can text the word invested 21,000 on your cell phone to get my digital business card. Feel free to download it. Send me off an email or text. I'm always happy to engage and talk about markets, planning, thoughts, concerns, issues, whatever's on your mind. And you can also follow me on Twitter and TikTok at Kenny Polcari and on Instagram at KennyP1961. So what are we having for dinner tonight? As I thought about this and I thought about the mood out there and I thought about pricing pressures, what comes to mind? How about the Russian potato and onion soup? Doesn't take a lot, doesn't cost a lot to buy the potatoes and the onions and the beef broth. It's not fancy, but when food prices are soaring, this will certainly fill your stomach. Ask any Russian. For this, you're going to need 2 pounds of peeled potatoes, 2 large Vidalia onions, butter, olive oil, beef broth. I'll put fresh grated Parmigiana cheese because you gotta do something to help it, and some chopped parsley. Right, so you want to begin by cutting the potatoes, peel them and cut them into cubes. Just rinse them under cold water, get them ready, set them aside. In a big heavy pot, you're going to melt a half a stick of butter and a splash of olive oil, right, in the large pot, just so the butter doesn't burn. Now you're going to add in the sliced onions and saute those until they're golden brown, 10-15 minutes. Keep the heat on low, cook it slowly. You want them to brown, not burn. Now you're going to take those cubed potatoes that you have and you're going to turn the heat up to high, add the potatoes in with the onions. You want to keep stirring the potatoes so they're coated in the onions and the butter and the oil. After about maybe 8 or 10 minutes or so, you're going to add in the beef broth, right? You want to make sure that the potatoes are covered and then some, right? Bring it to a boil, reduce the heat to medium-low, and continue to cook it. When the potatoes are cooked, you can remove a couple of ladles of just the potatoes and then take a hand blender and puree in the pot, puree the rest of the potato and onion soup so that it becomes thick and creamy. Right? If you need to, you can add a little bit of either more beef broth or a little bit of water if it gets too thick, right? Then you want to add back the other potatoes, and now I would throw in, a handful of grated Parmigiana cheese and some parsley on the top just to give it some color because it would look very bland otherwise. But you see, that goes right to the whole Russian idea, right? It's just bland. It's good. It actually is good soup. It's just not fancy, right? Anyway, when you serve this in warm bowls, and always just make sure you got extra cheese on your table because the cheese will actually give it a little bit of depth. Let's just say, right? In any event, look, the sun is up. It's going to be an interesting day. Global markets are weak, as I said, so we'll see what the week brings us. But do not be surprised if we see the market struggle here as rates start to go up. Even though earnings may come in and beat all the estimates, there is going to be, at least today, there's going to be this tone of caution ahead. So stay close. No time to go to sleep. Until tomorrow, take good care.